Well, for more on what we're watching during the first trading day of 2026, let's bring in the voice of Aadil Zaman, partner at Wall Street Alliance Group. Thanks so much for joining us in studio. Happy New Year to you.
Happy New Year.
As we really digest the performance that we saw last year, we saw double-digit gains on the year. That's the third time in a row that we've been seeing this. So many people call it a banner year. But as we look ahead to 2026, do you still expect that magnitude of performance?
I think that this will potentially be a good year as well, but there was a lot of policy changes to absorb in 2025. And I think that low taxes, less regulation, lower interest rates, tariffs, I think a lot of that has already gotten factored in 2025. And 2026 is going to be all about execution. So companies that deliver on their execution will perform well. Companies that fall short are going to get punished.
Well, so a lot of people have been saying that, but I have to always ask, what does execution look like? So is it better earnings per share? Is it fewer in headcount? Is it, I don't know, less bond raises? What is execution?
Yeah, so it would be all of the above, right? Execution would actually mean that when the companies are reporting earnings, we are seeing bottom line results. And we do think that one of the biggest risks heading into 2026 in the market right now is the concentration risk. With about 35% of the S&P 500 and a handful of tech companies, I think there is a lot of vulnerability there. And for that sector, the expectations are sky high. So anything short of like a perfect report could potentially lead to a pullback. So that's why for us, this is going to be a year where there's going to be a handoff, and we feel there's going to be a change in leadership.
So when we talk about this handoff, the change in leadership, where are you all looking?
So first, I think if we take a step back, first thing we think is that a pullback is definitely on the cards. Markets, you and I both know, markets don't go up in a straight line. 10 to 15% pullback, we do think is on the cards. I think that from that point onwards, after the pullback, there's going to be a handoff in leadership from the AI winners to the AI enablers. So the AI winners are your NVIDIA, Microsoft, Alphabet's. AI enablers are the companies that build the infrastructure that make it possible for AI to exist. So these are the companies that we think are going to do well.
So what's the time frame in terms of that pullback that you were talking about?
I think it's not a question of when, it's not a question of if, it's a question of when, right? So we were just talking about right now that seasonally the market, this is a strong period in the market. We would anticipate at some point this year we do get that pullback, right? And that's where we'll start to see some of that pivot happen.
What is on your radar for 2026? So obviously the SCOTUS decisions on tariffs and so on has to be on everybody's radar. And there are a few things like that. But I mean, things like regulation for banks and lighter regulation, maybe the New York City mayor, you know, might throw in a little black swan event in there somewhere. What are you thinking about?
Well, what we are thinking about, first of all, we do think this whole AI enabler story pick up, because we think that there's going to be a lot of investment there globally also with data centers, and with the big beautiful bill, you're going to see the bonus depreciation play out, and that's going to benefit that sector as well. We do think that international markets are going to continue their outperformance of the US markets. And to your point, we do think that because of lower rates and less regulation, financial banks should start to do well. I think those are going to be the driving themes going into 2026.
So if those are the driving themes, does it matter if the Fed cuts once, twice, three times, or doesn't cut at all?
I think the market is probably factoring in a few cuts right now, right? I think that is probably already factored in. And I think that's going to be immaterial if they do one more, one less, you know.
Yeah. Is now the time for small and mid caps?
I think that's the sector that we have a strategic allocation to that sector, and also with the broadening, I think that money flows are going to go into that sector. So a strategic allocation should be there in small and mid cap as well.
Give us a little more detail on that. What kind of strategic allocation and where?
I think that for us, it's not a high conviction area for us right now, because we think that could potentially take time to play out, right? But I think for us, the more high conviction areas are the utilities, the industrials. Those are the areas that we think are going to do well. We have, for our clients, we do have some index fund exposure on the small and mid-cap sector, which we think eventually will also do well with the broadening of the market.
You mentioned the bond universe and that you have a strategic allocation there. Where exactly? And domestically or corporates or?
Yeah, we have government as well as corporates, and on the intermediate side, we are keeping that exposure. So, on a moderate allocation side, we keep roughly around 20% in these type of bond exposure.
You also mentioned about potential opportunities internationally. Where specifically are you looking?
So we think that the international markets and the U.S. markets have gone through in cycles, right? Where the U.S. markets are now coming out after 14 years of dominating in terms of returns. The international markets, we think that cycle is going to change starting from 2025. And a lot of countries now are going to focus on making their domestic economies stronger as compared to the US, and they don't want to be heavily dependent on the US. So China is one area we've started seeing that their policies are changing more towards support and less towards control. We're also seeing that Mexico is benefiting from relatively lower tariff rates, and their exports to the US are increasing. I think this trend does have legs, and we do want to have strategic allocation to these areas of the market.
So are you buying individual companies in some of these countries? And what about Asia? So those were two sort of LATAM countries. Any interest in China, for example?
Yes, so we are getting exposure through ETFs to those markets. So we have the iShares IXUS ETF. We have the China FXI ETF. This gives us strategic broad allocation to the international markets.
All right. That's just wonderful. Thank you so much for joining us in studio. Aadil Zaman is with us here from Wall Street Alliance Group. He's a partner there at that company that is a wealth manager, basically.